to another episode of Equity Mates on AusBiz. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Great to be back for another Wednesday, Watchlist Wednesday, our favourite time of the week.
Yes.
And we've got one of our favourite guests returning.
We do. It is a pleasure to welcome back to Equity Mates Elise Kennedy from Jarden. Elise, welcome.
Thanks for having me on the show again.
So, Elise, the rules are simple, as we've done with you before here on AusBiz. 3 stocks on your watch list, why they're on your watch list, and perhaps a little bit about the company. So, let's start at the top, and we've got Xero, ASX ticker XRO. Why is Xero on your watch list? And tell us a bit about it.
So I think Xero is on our watch list because the result is coming up this week, and it's quite topical. So we're positive on this stock, mainly because it's got a $74 billion TAM. It's got less than 20% penetration, which helps sustain its existing multiple. And we're seeing catalysts such as the digitization of tax drive adoption. But why I'm pushing this one and talking about this now is into that result, though, we think there could be a bit of a buy on the dip situation. Why is that the case? So we are seeing across the globe, we saw lockdowns come out in Australia and New Zealand. The US, that's going and recovering well, but over in the UK, they're not quite back at pre-pandemic levels, those SMEs. Yet, if you look at where the sell-side consensus expectations are, they're looking for record numbers in a lot of these markets there. So I think that going into a result is always a bit of a risk if those environments are not back at those record highs, particularly for SMEs who were some of the hardest hit during the pandemic. The other component around that, though, is also the investment side. If you go back to the last half result, the stock actually fell 20% on the day, and it had a lot of high expectations leading in. Now, one of the key drivers of that was Xero saying we're going to invest. So their EBITDA margin in the second half was around 16%. They've been very clear, from what I understand, that they're going to keep investing in the business given the large runway and opportunity to grow. Now, if you look at where consensus numbers is, they're forecasting for this next half in margins to improve again back to 22%. Us at Jarden, we've got them 17%. So I just think, again, the combination of perhaps better, stronger top line than what may actually transpire, combined with perhaps stronger investment, might see the stock a bit softer on the day, long-term opportunity. But again, that's one I think is quite topical for this week.
It's definitely a company that's getting a lot of buzz at the moment. It seems like a little New Zealand company taking on the world. I love the fact that Bryce didn't mention your background, so I think I've got to mention it. We love the fact that you're willing to pull over to the side of the road, jump on AusBiz and share some stock picks with us, and you've got those numbers committed to memory. That's a real commitment to your craft. We love to say that.
It's great to be on the show, and won't let the backdrop get in the way of some good investment ideas.
So the next company that you've got on the list today actually is a sell. So we don't normally get negative here on Watchlist Wednesday, but sometimes we've got to. But it's a company that a lot of people have probably bought over the past few years, and that's Altium, ALU. So why are you watching it, and why do you think it might be a sell?
If you look at where the share price is and where the multiple is, it's again back near all-time highs, back to where they had a bid price that got rejected at Autodesk several months ago. Now, why are we not so positive on this stock? Again, if I compare it to the market opportunity and the TAM that we just spoke around with Xero of 74 billion, compare it to Altium's, which is reaching, similar types of multiples, and it's 1.2 billion. So you can't really sustain that type of multiple in our view unless you're expanding your market opportunity. So look, there could be an opportunity longer term for them to grow that, but right now in the immediate, from what we know, they're not necessarily able to keep that multiple. And then the other component of that for us as well is they're still in that stronger investment phase to keep building out their product suite. Whereas in Xero's case, again, you're building that because there's catalysts for you to be able to adopt that. But for Altium, remember, they've been in the market for over 20 years listed. And it's not as clear cut as to the market opportunity because everyone in that software of supply chain management space has software already, whereas adoption in accounting software was less than 20% for us. So I think putting all of those together, and given where valuation and the way that the stock has run in recent, I think it's hard for us to recommend buying that at this point in the time with what we know.
We don't want to keep you off the road for too much longer, so we'll move to the third stock or stocks, which are really playing on the housing thematic, and that is REA Group and Domain. Perhaps if we start with housing, it seems to be everywhere in the news at the moment. Can't go to the pub without talking about house prices. So if we can get your take on what's going on at a macro level, and then perhaps why you're watching REA Group and Domain.
Absolutely. And I think that's the key thing is we might not all be able to play in that property market, but let's perhaps play on a derivative of that housing market, which is what Domain and REA are leveraged to. So you've seen house price increases of 10 to 15%, CoreLogic data showing it up another 1.5% in the last month. And this correlation that exists between house prices and then listings volumes, which is how the core of these platforms makes their money, is what bodes well for these two names. And I think last week we saw in the quarterly results the pent-up demand that exists there. So even REA, you think this portal's been around for ages and has a lot of traction already. They still saw inquiry levels up over 40%, nearly 50%. So that demand is really strong to keep pushing up those price levers. But the other two things that I think is perhaps less appreciated by the market and is really key for some of the investors to watch is one, around stamp duty changes. So that isn't in any of our numbers at the moment, but it might become more of a topic of conversation post your federal elections next year. And that could be a meaningful driver to listings volumes, because a lot of us are not transacting because of what a stamp duty inhibits and, having to pay that tax and upfront cost. And Dominic Perrottet was one of the treasurers at the time in New South Wales that put forward and proposed what implications that could have on housing turnover. And New South Wales accounts for about 30% of total listings volume. So if you start to hear that conversation and you start to hear that there might be removal or changes in the way that we are taxed on that should bode well for these two names. The other component that I think is really interesting is around the prop tech side. So we're seeing an increasing number in the VC space, but also around some of the companies such as Domain and REA play more into there. So what happened during COVID is we saw again catalyst to agents having to do things different, and us as well as a consumer having to jump online, do a virtual tour, do that booking there, find efficiency. And the thing is that we're more now willing to do that we could monetize that. So for example, with the strong demand, some of the options is you can pay extra to get access to private listed property. And a lot of us think, hey, that would sound fantastic. I'd be willing to pay extra that. So adding that again to the revenues, which we probably don't all have in our models, should just bode well for what is already a fundamentally underlying very strong property market.
I guess the bear case side, and it's not a huge bear case, but how do you factor in, when the market gets this hot, traditionally then there's pressure on banks to tighten their credit policies, and we're kind of seeing that now with some of the banks changing the way that they, screen or test, pressure test. And, if the RBA comes out and makes any sort of changes as well, how does that factor into your sort of 12, 24-month horizon for these companies?
Absolutely. I think that's the challenge is though the leverage that we have, it's not as though the RBA or other lenders such as APRA can really put a full foothold on that because of the, you don't want to, coming out of a recovery, really tip the economy into a recession. So it's kind of right now, a few of the measures have come through at the fringes, and we're not saying that this is going to be, another 20% on top of the growth that we've already seen of the 10 to 15%. I think fundamentally what we're saying though is there's still very strong demand. The price increases are already high, and that again should drive individuals to the property market. That should bode well for the next 12 months.
Well, Elise, that does bring us to the end of our episode today. Thank you for taking the time from this side of the road. We really appreciate it. So you are the Vice President of Equity Research at Jarden, an investment bank Where can our community go to find more information about what your team are doing and perhaps listen to some of the content that you're producing?
Great question. There's two ways. If you jump online and you search Jarden, you see all of the analysts across all of our space and coverage. I specialize in tech. There's other analysts across all the other sectors. Also, we do have a weekly startup podcast for those looking in some of the unlisted stock space and some of those smaller emerging and entrepreneurial stories. Again, you'll find that with Jarden Talking Tech with Elise Kennedy. Thank you for that shout out.
It is a podcast that is quickly rising the charts, so check it out. But thank you, Elise. Just to cap off, we had Xero, Altium, and REA Group and Domain. So thank you for your time, and we look forward to getting you back on again at some stage. And all the best. We'll see you soon.
Thanks, guys. Great to be.
And that brings us to the end of another episode of Watchlist Wednesday. As Elise just said, she produces a lot of content through the team at Jarden. So make sure you go and check that out. There's some pretty good research coming out of her team. But Ren will be back tomorrow.
Yeah, that's it. We'll be back. We'll be talking all things space tomorrow. An interesting article caught our eye about the race to build private space stations. Some of the companies involved and some of the ways that we can invest. So join us same time, same place tomorrow as we unpack that all.